Welcome to Quick Bite, your fast and friendly Florida insurance update.
Hello, hello, hello. This is Roshonda, agency owner of the Isom Insurance Group here in the Sunshine State of Florida, back again with another Quick Bite episode, your fast and informative insurance market update. Today is Monday, February the 9th, 2026, and we are officially, as always on Mondays, recapping the week. This is week 4 of the Florida legislative session, which ran from February the 2nd through February the 6th. If week 3 was all about friction, then week 4 was the week where reality started to set in for many of these high flying bills. We are officially halfway through the session. The legislative honeymoon is over. We are starting to see which bills have the stamina to cross the finish line and which ones are grasping for air in Tallahassee. Today, we are doing a deep dive into every major insurance bill currently on the table because, let's be honest, your mortgage and your peace of mind depend on what these folks decide over the next few weeks. I've got the stats, I've got the updates, and I've got a few opinions because I can't help myself. Let's jump in. Before we get into the individual bills, let's have a talk about the mood in the room. Last Wednesday, Senate President Ben Albritton basically pulled the emergency brake on everyone's expectations. He told reporters that he doesn't expect major changes to property insurance laws this year. Now, for those of us paying premiums, that sounds like a letdown. But his logic is that the reforms from 2023 are finally starting to work. He pointed out that frivolous lawsuits are down and he expects rate reductions to start trickling in soon because we had a relatively quiet storm season. While the Senate president is playing it cool, the House is still moving full steam ahead with some pretty aggressive transparency bills. It's classic Tallahassee standoff. Senate wants to wait and see, while the House wants to keep poking the bear. So the first bill we're going to look at is the litigation financing bill, which is HB 1157 and SB 1396. This is the bill that seeks to pull the curtain back on who is actually paying for these massive lawsuits. The Senate version, SB 1396, is moving like a rocket ship and was recently placed on the calendar for its second reading. This means it's very close to a full Senate vote. The House version, HB 1157, is still sitting in the Civil Justice Subcommittee, but don't let that fool you into thinking it's dead. The debate is still heated. On one side, you have the transparency crowd saying we shouldn't let foreign hedge funds treat our courtrooms like a Vegas sports book. On the other side, trial lawyers are arguing that if a regular person can't afford to sue a giant insurance company, they need these funders just to get a seat at the table. It is the ultimate David versus Goliath argument, except in this version, David has a private equity firm in his ear. Exactly. The next bill is the 200,000 homestead exemption, HJR 209. This bill is the golden child of the session, but the neighbors are starting to complain. It's currently on the second reading calendar in the House. This would give a massive $200,000 property tax break to everyone who carries insurance on their home. Remember last week when I did this video, I was saying how a lot of the counties and cities are kind of complaining about it, saying that it'll be a big dent to the budget. So, that argument is playing out. So this one is interesting to watch. The update for week 4 is that the local cities are officially in panic mode. They are projecting a loss of up to $8.6 billion in revenue. Think about that for a second. That's a lot of potholes that won't get filled and a lot of library books that won't be bought. The compromise on the table right now is a 5-year sunset clause, meaning they'll try it out, and if the city of Miami goes broke, they can cancel the program. It's a bold strategy, Cotton. Let's see if it pays off for the voters in 2026. The next bill is the Affiliate Fee Transparency, the HB 1399 bill. This is the bill that makes insurance companies open the books. It requires them to show the Office of Insurance Regulation exactly what they're paying their sister companies. Last week, we saw more momentum here as lawmakers discussed a new requirement. All contracts between an insurer and its affiliates must automatically terminate after 3 years unless the OIR approves an extension. Basically, the state is tired of insurers saying they have no money to lower rates while they are simultaneously paying their own marketing affiliate millions of dollars in fees. It's like telling your spouse you can't afford a vacation while you're secretly secretly consulting your fees from the joint account, like stifling consulting fees from the joint account. We see you, and so does the legislator. As I said, I don't see anything wrong with this bill. I don't know. I have to dig a little bit deeper, but I don't see the big fight for that bill, like against that bill. The next bill is AI and claims, which is SB 202 and HB 527. This bill remains the most chill bill in the session. It has virtually no opposition. I don't see why it would. It simply says that if insurance companies want to deny your claim, a human being with a pulse and a license has to sign off on it. You just can't let a computer algorithm say no and call it a day. It passed through most committees this week and is cruising toward the finish line. I don't think that bill is going to have any pushback. That's really a non-controversial bill. I think it makes sense. Like I said before, it makes sense for the customer as well as the company. I believe a human being has to deny someone's claim, not just a computer. The next bill is the roof age protections, which is HB 815 and SB 808. This is a big one for my clients with older homes. The bill prohibits insurers from denying coverage solely based on the age of roof if that roof is less than 15 years old or if an inspection proves it has 5 years of life left. The week 4 update is that insurers are now lobbying hard to allow for surcharges on these older roofs. They're saying, fine, we'll cover the old roof, but it's going to cost you an extra 15%. It's a classic insurance industry yes, but move. And then the last bill that we're really looking at is the PIP repeal bill, SB 522. Lastly, the repeal of no-fault insurance. This one is currently stuck in the mud. There is a massive disagreement over MedPay requirements. Some lawmakers want to force everyone to buy $10,000 in medical payment coverage if we get rid of PIP, while others say that just keeps the prices high. I agree. Until they agree on how to handle the medical side of a car accident, this bill is likely going to stay in the garage. That's an interesting one. Yeah, I like I said in the last video, I don't see how you're going to move PIP from PIP coverage to medical payment coverage. It's not going to do anything with the premiums. If anything, it might raise premiums because MedPay was never priced to cover PIP, like PIP damages. That doesn't make sense. If you're watching this and thinking, Roshonda, just tell me if my bill is going down. Here is the reality. The Senate president is signaling that the heavy lifting is done, and now we just have to wait for the market to catch up. However, the House is still pushing for more accountability. What this means for you is that 2026 is going to be a year of stabilization. We aren't seeing the 40% increases of years past, but we aren't seeing 40% drops yet either. We are in the boring part of recovery, which is actually good news in the insurance world. Boring is safe. Boring means I don't have to call you with bad news on a Friday afternoon. I will continue to monitor these bills daily As we move into week 5, keep an eye out for floor votes because that is where the real drama happens. If today's quick bite helped you navigate the messy world of Florida politics, now's a great time to stay proactive with your insurance planning. To request a quote or an insurance policy review, please visit our website at isominsurancegroup.com, which is also below me in the video. Remember, in Florida, the only thing that changes faster than the weather is the insurance codes. If you found this episode helpful, please like the video, share it with your fellow Floridians, and drop a comment below. Also, please subscribe. Subscribing helps you get notifications of when a new video drops. And yeah, I would love for you to subscribe. I want to know what you would take. I want to know, would you take a $200,000 tax break if it meant your local park had less funding? Let's talk about it in the comments. Yeah, that is a big controversial bill, and I really want to know what people think about it. I've heard both sides of the coins from customers that call me, so I really would like to get more comments. Drop comments below about that one because that's the big one that I'm really interested to see how it's going to shake out. Remember, Quick Bites drop Monday, Wednesday, and Friday at 2 p.m. Eastern. And as always, this video is for educational purposes only and should not be taken as legal, tax, or specific insurance advice. Please consult a licensed insurance professional regarding your unique situation. This is Roshonda with the Isom Insurance Group here in sunny Florida. Thank you for watching, and I'll see you next time. Please stay safe out there. Bye.
Thank you for watching. Visit us at isominsurancegroup.com.